All right, let's go. Dollar index here, daily chart. Drawing liquidity is pretty obvious. I'm looking for these equal lows down here. Okay, even these lows down here are too clean. Okay, so sell side down here on the 15-minute chart, these equal lows, way too smooth. And then that sell side we have outlined on the daily chart. So right now, bearish on dollar index. These two down close candles, that's one bullish order block coupled with a fair value gap here. So trading into the high of the order block, respecting consequent encroachment of this fair value gap. Right there. Hourly chart. I like the buy side above this high. I want to see if we can tag that. I like the idea of people predicting highs in the market, thinking we're going lower, rotating lower. I want to see if we can get above that. Really this rejection block here. So as long as dollar can look bearish, I'll be looking for this rejection block on the hourly chart. So that's my draw on liquidity. I'm watching this up close candle here as a mitigation block. I'm watching to see if that sends us higher. We have a low, high, and a higher low. Last up close candle is a mitigation block. Alright, so this is that mitigation block so far, unwilling to close past this up close candle. Again, low, high, higher low. Entire up close candle here. And I still like that rejection block on the hourly chart as a potential draw. Now, if we get above this swing high, I'm trading this up close candle here as a bullish breaker. So kind of forecasting that in advance. We have this low, this high, this low. Take your up close candle in between your two lows. I want to see that act as a breaker if we get above this swing high. And then I'll be watching to see if that can take us into that rejection block. Alright, so I'm watching if we stay above mean threshold of the breaker. If we close below midpoint of this up close candle, to me that's not a good sign. But markets are a little choppy right now, so take that for what it is. I really want to see us rip through this. It's way too clean, too smooth. Rarely do markets top off like that, so I'm not convinced as of yet that we're going lower. I want to see these highs ran out. Now, if we rip through that buy side, I'm watching to see how fast we trade above it. Ideally, you want to just see us blast through it. What I don't want to see is take out buy side, and then we have a deep retracement back inside the breaker. I want to see us just rip through it completely and have some speed towards our rejection block on the hourly chart. So I'm using that as insight. I'm watching to see how we trade above this level, if we do so. Alright, there's the buy side. Now I'm watching to see how fast do we rip through that. I want to see us explode through it. I don't want to see a deep retracement like this down close candle, this bullish order block. I don't want to see us trade back down into that. We need to be in a hurry, blast through that rejection block. So we traded back down into this down close candle. That's fine. I didn't want to see that. I'd rather just see us continue to explode. But that is a discount PD array. And then using time. So in the Discord, I always teach that 11 o'clock is obviously profit taking hour. Okay, expect some sort of retracement or reversal as you head into that 10:50, 11:10 macro. So time and price right there. So preferably, I want to see our rejection block target hit before 11 a.m. So this is right here. It's 11 o'clock, meaning we have about 31 minutes, which is 31 1-minute candlesticks to reach our objective. If we fail to reach that rejection block by 11 o'clock, then that's when you want to start scaling out of your position, because you're entering that time period where price can retrace or reverse, because that's London close, profit taking hour. So 10:50 to 11:10, that's when you can expect some sort of retracement in the opposite direction of the morning move. So I want to see some expansion here. That's the speed I wanted to see above this high. Watching to see if this fair value gap can send us higher. We also have these two down close candles, which is a bullish order block. Now let's say I'm in this trade and I have multiple contracts on. If we were to tag that rejection block, we still have time left in the day. So we still have a few minutes left until 11 o'clock. Like if we go back to our hourly chart, remember I said that rejection block is our first draw, but if we can accelerate through that, we'll obviously be looking for buy side above that high. So I'll be looking for that if we hit our first target before 11 o'clock, because we still have time left in the day. I'm not expecting a retracement or reversal until we get to at least 10:10. 10:50, I meant. All right, boom. There's that hourly rejection block target hit. Now, because we still have about 15 minutes until 10:50, I'll be looking to see if we want to reach up into that buy side. But if you're in this trade, not trade advice, but if I was in this trade, definitely want to take the bulk of your position off at that rejection block and leave a small little runner on, since we still have time in the day. See if you can reach for that buy side. And then let's look at the 5-minute real quick. There's something I want to point out there. 5-minute chart. I was looking at this on my monitor. This fair value gap, breakaway gap. The fact that we didn't trade down into that, that's a good sign that we're likely to see higher prices. We're consolidating. We drop down, rally up, breakaway gap, first fair value gap after this consolidation. Want to see that stay open. So we trade down, we don't trade into this fair value gap, and we start to move away. That's telling me that order flow is bullish, we're strong, and we're likely to see a continuation higher. Now, if you were to trade all the way down and completely fill in this fair value gap, that's fine, but preferably I don't want to see that. And then you see what we're getting here. The low on these candles, I just appreciate the precision like this, but this candle's low here is the exact low of the breaker, and then this swing low before we take off, that swing low is exact low of the breaker again. Order block, and then we rally, fair value gap. I like how we didn't come back down to this order block. We didn't need to, using the fair value gap instead, reaching our target. I get a lot of questions, like people always ask like if I feel some type of way because I miss moves, like on days that I expect to be low probability and we still highlight it like this and it pans out. If I feel any kind of FOMO, of course not, because I know 9 times out of 10, like these days for me personally are more difficult. So I'm accepting the fact. I just use that as practice. It's a win-win situation, because if I know it's likely to be a choppy day, I think we can all agree this was, for the most part, hard to read. And then this consolidation here, even if I was in this trade, it's consolidating. This is going to put a lot of stress on your mental equity. So the trade may pan out, but look at everything you have to sit through. And that's fine if you're willing to do that, but I don't have any FOMO. I don't have any regrets. I just use days that I think are likely to be low probability. I paper trade that, or I just tape read it like we're doing here. And I kind of outline it as if I was in the trade. When do I want to see my targets hit? What do I want to see offer support? Okay. No FOMO. I don't care that I didn't participate in this move. All right. If the trade loses, like let's say I traded today. If the trade loses, then I'm going to have regret. That's going to be the real regret, because I know I shouldn't be pressing the button this morning until after the Fed chair speaks at 12. But if you tape read it, that's a win-win, right? If the trade pans out, but you're not in the move, you gain experience, you gain confidence, right? If you're looking for this rejection block down here or up here and it rotates lower and your targets don't get hit, you didn't lose any money on that and you still gained experience. So no, I don't have any FOMO when I'm tape reading. All right, again, I want to see if we can reach that buy side target before 11 o'clock. This is that 10:50 to 11:10 macro. But I want to see if we can accelerate, tag that buy side in the next 19 minutes, which is 19 candlesticks. Down close candles. I'm watching to see if that supports price. If you're bullish, you want to see down close candles send price higher, and you want to see up close candles ran through. That's my focus. If I was in this trade, I'm trailing my stop loss a little tight because we're entering that macro in about 7 minutes. I'll put my stop underneath this low, but the bulk of your position should already be off at the rejection block. Leave like a small micro or something, whatever, however you trade. Leave it on for the buy side. Right. In the next 13 candlesticks, I would like for that buy side to get taken, but we don't need that. That's not required. The rejection block in itself is already liquidity because the bulk of the volume is in the bodies of the candle. So on the hourly chart, how we have the bodies staying all right here, so there's liquidity here. Okay, we don't have to get above this high. The bulk of the volume is in the bodies of the candles. So you can see that as we've already tagged a liquidity pool. And then again, my stop loss would be below this down close candle. For me, that would be like the last line of defense for higher prices. These highs, in my opinion, way too clean. Same thing we had up here. These highs are really smooth. If we run this high, I like to run down my equity. Most times I only trade one contract anyway, so I can't do this. But let's say I was trading micros and I had like 5 micros on. If we run out these clean highs, that's an area to take a partial. Okay, run down some of your equity. Same thing here. As soon as we run that, that's a partial. Okay, this high here, trade down. I probably wouldn't take a partial above this high simply because the rejection block is right there. So take bulk of your position off there. And then we have these smooth highs. Again, same thing we had down here. Way too smooth. Drop down. If we were to blast through that, I'm paying myself there. And then, again, leaving a small portion on for that buy side. All right, so that should be a partial right there. Why is it wise to take a partial right there? Because we're now in that 10:50 to 11:10 macro. That 20-minute window likely causes a retracement or reversal. So you want to start scaling out of your long position. And then just like we saw here, how when it's speed above these smooth highs, the same thing applies up here. Preferably you want to see us rip through that high. You don't want to see us take out that high in the retrace. You want to blast through it, which is what we're getting here. If you remember, this last down close candle was the last line of defense for higher prices. There you go. Support. Now, forecasting this as a potential breakaway gap, just calling it in advance. If we form a fair value gap here, I want to see the lower half stay open. So consequent encroachment and below. Preferably you want to see this entire fair value gap stay open. But if we drop down into it, I would like for the lower half to stay open and then reach for a buy side target. Pass another challenge with that long. Good stuff. Going long in the breaker. That's what's up. So I'm watching midpoint. So consequent encroachment. I'm watching to see if we stay and leave that unfilled. And we have 8 minutes, really about 7 minutes for buy side to get hit. So the next 7 candles, I want that target. Time and price. Didn't even realize I was muted. We're leaving this lower half open, which is what I like to look for. Okay, that signs a bullish order flow. So far, we're getting exactly what we like to see. Stop loss would be under here, this down close candle. This was a master class, not gonna lie. This was fun. All right, it's 10:56. So the next 4 candles, I want that buy side target. So these 2 down close candles should offer support, but ideally, don't want us to trade down into that. We need our buy side target. We have 3 minutes. Now my stop loss personally would be moved underneath this down close candle because we're running out of time in the day. So I want to make sure I lock in as much profit as I can. So I'll move my stop loss underneath this swing low. There's your bullish order block we just tapped into. Okay, it's fine that we traded down into that. We also have a small little fair value gap in here. Small little inefficiency there. So that's permissible. I wouldn't want to see that if I was in a trade, but it's fine if we trade down into it. It's no big deal. We got about 1 minute. So this candle or the next one, ideally in a perfect market, you want to see that hit your target, but you should have already ran down your equity above this high here, above this high here. We form another swing high, so we're already running out buy side taking out this high, buy side, this high here, buy side, smooth highs up here, buy side, this high here, buy side. So you should already be running down your equity as we get closer to 11 o'clock. And notice where the bodies open and close right at the high of the order block. And it's 11 o'clock, so I want to see if we can blast through this. I'm going to move this out of the way. Right there. Let's see if we can hit take profit with this one candle here. 11 o'clock on the dime. How cool would that be? Uh-oh. How cool is that? We just walked this thing down from the open all the way to 11 o'clock. 11 o'clock candle on the money. I mean, that precision is just, like, you gotta love it. That was fun. Hopefully that helped somebody learn a little bit of incorporating time with profit taking, managing your trade as you get closer to 11 o'clock. Literally on the money. It doesn't get any better than that. That was textbook. Highlighting all the PD arrays. We weren't looking for any shorts. We weren't looking for any sell side or anything down here. Breaker, order block, fair value gap, order block, last line of defense for higher prices. Fair value gap, we wanted to see that lower half stay open. It's almost like it's random. Order block, last line of defense for higher prices. I said my stop loss would be placed underneath this low. We get to 11 o'clock on the money. Live trading the PM session for those who have access. We're going to try to find a setup after the Fed chair is done speaking. But this was great practice. I'll get this edited and posted on YouTube. Hopefully people on YouTube can gain some kind of insight from this and help somebody out. Love y'all. Be safe. See you in the market tomorrow at 9:30 for those with access. All right. Peace.